so red across the screen for the Asia-Pacific markets.
Consolidated profit was down 11%. Even revenue has fallen almost 4%.
Consecutive quarter for a short linen to post double-digit EBITDA margin.
Nifty for you down about 0.4%. Mid-cap index is losing a little more than that.
I'm kind of glad in some way that the reality has set in that there is gravity.
Net debt to EBITDA, which is at 1.49x, and in near future, over 2 years, it will go down to 1x.
We're above 24,250. It's been a solid 250-point recovery from the day's low.
First decline in volumes in the last 12 years for Asian Paint.
Our focus is to now actually broaden the EV journey of India from scooters into motorbikes into three-wheelers also.
Well, we did see a sharp recovery from the lows around 250 points, and now we are off around 140 points from the highs of the day as well.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Hello and welcome. You're with us on Closing Bell, and it's turned out to be a slightly quiet day of trade as far as the indices are concerned. Perhaps the bulls will not be too disappointed with that. At least we're not collapsing. Of course, I'm Surabhi Upadhyay. With me, as always, my colleagues Reema Tendulkar as well as Nigel D'Souza. But guys, if you look at some of the global markets, they're actually doing a little better than us. Europe futures right now, and watch the dollar. The dollar continues to surge ahead as well.
Okay, let's pull up that dollar index. Was at 105 for the last couple of days. Let's see if it's pushed higher from there.
105.26 now. So that whole Trump trade charge seems to be still continuing.
Still 35 now, 105.35. In the morning, I remember seeing 105.1, 105.2. And now it's pushed up even higher. But by the way, it's also a bit disappointing, right? Because in the first half of the trading session, there was a solid recovery. The Nifty had cruised past levels of 25,300 plus. And from there, as you can see, a little before 12 o'clock, the descent started and the markets have lost about 200 points from the day's high. And it's the consumer names which are caving in. It's not just Asian Paints. That continues to be down 8.5%. Top Nifty loser. No recovery in sight for Asian Paints, but even Britannia ahead of the numbers. And one of the key takeaways from the Q2 earnings season has been that urban consumption has been slow. So maybe Britannia is seeing some pressure ahead of that. But outside of, getting to the winners list, IT is strong. Last week, remember, the Nifty IT index was one of the few sectoral gainers. The Nifty IT index added more than 4.5%, and it's followed it up. So there is further buying seen in the Nifty IT with names like Infi, HCL Tech, TCS doing pretty well. Top gainer today is Power Grid, and then you've got Trend, which is, rebounding.
Well, that's right. In the Nifty Bank, if you pull up the 20 and the 50 DMA, the Nifty Bank has managed to conquer the 20 DMA, and intraday it went past the 50 DMA as well. But in the last 90 minutes or so, we've slipped back, below the 50 DMA. So you'll want actually the Nifty Bank to get past that 52,000 odd mark. I think let's get the Nifty Bank up for you on the screen. And that's the one actually that's holding one end up. Perfect. That's the chart that we're talking about. So we just require around another 150 points odd to get past the 50 DMA. If the Nifty Bank can conquer the 52,000 odd mark, the bulls will feel quite good. And, besides the tech space, HDFC Bank, that's been the space to hide, because that stock, in fact, is close to 10% weightage on the index. And that's holding one end up. Even in Friday's trading session, it ended in the green. Even today, it's up close to 0.5%. So that's clearly holding one end up. And the breadth of the market, yes, in fact, it's firmly in favor of the number of stocks declining. You have 1,700 stocks that are declining, only 700 stocks that are advancing. And those lines, after they try to get a little bit closer to each other, they've moved back away. But I don't think it's such a bad outcome that the Nifty is seeing a bit of a price-wise correction, because that 200 DMA was much talked about. But in the near term, we're seeing a bit of a fight at around the 24,000 odd mark. Let's get in our expert. We have Mitesh, who's back with us. Wait, I think before that, Surabhi, you're having a closer look at the flows data. What is your initial reading of this?
Money, 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 and more money coming in, and it's coming in across categories. Just very quickly before we get started with the trading calls of the day, this is something that the market really wanted to know, right? With the onslaught of the FPI selling and the market getting range bound. In fact, correcting in the last 1 month, we're down 8%. Domestic investors have kept the faith, and it's a sort of a resounding vote of approval in favor of equities that we've got, because the numbers for the month of October are clocking in record highs. So the net number, obviously, on the equity side has crossed the 40,000 crore rupee mark. There was a bit of a dip in September. Let's pull up the first number, the net equity inflow number first, because after a bit of a dip in September, October, when the market fell, there has been a resurgence of flow. So that's telling you that that lesson has been well learned on buying for the long term. And the money has come in large cap funds, mid cap, small cap. All of them have been drawing higher funds. Thematic funds have continued to do really well. They've once again clocked in about 12,000 crores. And the hybrid category continues to do very well. Hybrid funds like the multi-asset allocation category, the balanced advantage category. That's the headline number that I was talking about. And that's the hybrid category. Look at the surge in flows. So the money is coming in short point in most categories. This time, the numbers are not driven by too many NFOs, which is actually maybe a healthy sign. It's not too much of product engineering, but money coming in existing funds as investors have kept the faith. So very healthy sign from the October MF inflow data. Now, Nigel, I think, put that good news on board. Let's go ahead and look at the strategies of the day.
All right. Well, let's get Mitesh back in. Mitesh, that initial morning trade did work out, right? You go ahead to buy the dip. But, you know, that we're seeing some kind of selling pressure even at higher levels. And the range that I had given today was around 24,350 on the upside. We're not able to get past that. What do you make of today's trading action, and what would your current trade be, both on the Nifty as well as the Nifty Bank that's showing signs of giving in a bit of a fight?
Good afternoon, Nigel. I think, early in the day, I was looking for a bounce back. That bounce back did come out, and your trading stop loss got hit, and we are back to square one where we started from. Now about 30 odd points positive. So I think, on the index, I don't have a trade right now. I think I'll wait it out because we had the trade in the morning, which is on the long side, and now we're out of the trade with the trailing stop losses being hit. It was a mildly profitable trade, but what is important for me is that, 124,000 is still holding. And two, I think the PCR still remains on the slightly oversold side. So I don't know when, but I think the next leg of a bounce back would happen unless until we see the Nifty break the levels of 24,000. And you rightly pointed out, the back Nifty, which has been sideways, is today, at least for the day, supporting the Nifty. The back Nifty also, if it could close above 52,050 odd levels, then we might see more strength tomorrow. So, maybe we'll take some long trades on the financial names, but that will be on the BTST side. And once we see the bank Nifty stabilize above 52,050, till then, I think, it's a wait and watch kind of a scenario on the index trade at least.
What about stocks, Mitesh?
Good afternoon, Nima. On the stock side, I have a buy on CUB, City Union Bank. I think it had a rally and today is declining. So it's entering a good, long trade with a risk-reward equation in your favor. So try to buy it around 173, another 1 rupee lower from here, and keep a stop below 170. Look for a target of roughly around 180 to about 182 on the upside. And Glenmark is also a conditional sell. It's trading very near to the support levels of 1635, 1638. So if it breaks 1635, take a 20-point stop loss, 1655, and look for a short side trade with a target of 1590 or below.
Okay, thank you very much for that. Let's talk about the fundamentals of Biocon now, because the US FDA has classified the company's Bengaluru unit as voluntary action initiated. And look at the way that stock has surged, up 8.5% now. Vinny joins in to tell us the implications. Vinny.
Yes, good afternoon. So 8% higher. It's the biggest single intraday gain that we've seen coming in for the stock since the 6th of June. So interesting. And this voluntary action indicated is for the Biocon Biologics Biocon Park site, which is in Bangalore. Voluntary action indicated means it's a positive sign. So not much action that will be taken by the US FDA. They've gotten a clearance. The inspection for this facility was between July 15th to July 26th. And this included 6 separate biologics manufacturing units. Now, what does this do actually for the company, and why is it so positive? Because it paves the way for a lot of approvals that will be coming in for the company going forward. Let's not forget, Biocon Park facility had also been approved by a lot of other international regulatories as well and agencies like the EMA. They've already been approved by them. US FDA clearance was something that had not come in because of the inspection. So that was a bit of a glitch that came in on that front. Now from this, they have a lot of drugs that will be coming out for approval as well. We could be watching out for bevacizumab, which is mainly used for the treatment of cancer. lung cancer as well as ovarian cancer. This was one of the drugs that the company said that they were looking to launch in the next 2 to 3 years. So now this does pave the way for that. It will be interesting to watch out for the company's launches coming out, what more they have to say on this one, but surely a positive that we're watching out for.
Okay, all right. That's Biocon, and the stock's up about 8.5%. Thanks for that, Vinny. Deepan Mehta is our first guest on the show. Deepan, great to have you on. So we're going to ask you about a lot of individual stocks today because it's the fag end of earnings season. Biocon, this FDA news has worked really well for the stock. Would you share this kind of optimism? What's the call on the company?
Yes, Sophie, good afternoon, and thank you for having me on your show. I think there's one company which has really lived below its potential. It is Biocon. I think it had all the characteristics of being a great stock and creating a lot of wealth, but somehow for some reason or the other, it has underperformed the broader pharma stocks for the last several years or so, and the performance has never come to the street's expectation. Sure, this is a great development, but the earnings have been very poor for the past several quarters. The acquisition which they did also took on a lot of debt, and valuations are on the higher side. I feel more comfortable with stocks like, say, Lupin, which I thought came with excellent set of numbers. Even Sun Pharma, India's largest pharma industry, is really rolling out its strategy pretty well when it comes to specialty products. And there are some interesting mid-cap stocks also, like, Kaplan Point. All of these stocks we and our clients are interested and invested in. But I prefer a lot of other pharma shares over Biocon at this point of time.
Okay, so not in favor of Biocon. By the way, today is a big day, as we all know, for a lot of consumer companies on Nifty. All of those stocks are making headlines. There is Britannia, which, like Rima pointed out, is sulking ahead of numbers. There's Asian Paints, which has issues that go well beyond the second quarter, it seems, because the market's not willing to buy the dip at all. And then there is Trent. Look at the fall on Asian Paints. It's dramatic fall coming through on that stock in the last couple of weeks. And then there's Trent. The reason why Trent has been up today is because of a note from Goldman Sachs, where Goldman thinks that after the correction, maybe the stock will start a good run again. Their target price is 8,000 on Trent. So let's see if we can get Manglam, because all of this is very, very interesting to go over. On Britannia, as Manglam joins in, the expectations actually seem to be fairly okay. 6% revenue growth, that's what Manglam's poll is telling us. But is it just nerves? Is it something else? I think we have Manglam. So Asian Paints we've discussed right from the morning. We'll get to that in a second, Manglam. But Britannia, nerves, just nerves ahead of numbers?
There seems to be a lot of nerves ahead of numbers. And the reason why I say that is because, the rural part of the economy is expected to be picking up. And that's the part which Britannia also believes that will be the volume driver of the company. That's something that they had said in the prior conversations that they've had with analysts itself. So as a result of which, analysts have baked in about 9% in terms of volume growth for the second quarter. Will that happen or not in light of the weakness that we've seen in all the consumer sector companies, is something that we'll have to most definitely watch out for. So 8 to 9% sort of volume growth is what the street is working with this time around, with the 2 to 3% price decline. If the company disappoints on that, just the way we've seen in a lot of the other companies, then maybe the street is pre-positioning itself. Ahead of today, the stock was down 12% from highs. Now that cut would be, higher by about 17% But overall, what is it that the street is working with? 6% growth in the revenue. The EBITDA margins are likely to contract, so the EBITDA grows at around 2.5%, and the net profit as a result of which also shows a feeble amount of growth. But more than just the numbers, it'll be the management commentary on demand uptake, the management commentary on, how adjacent businesses of Britannia, apart from cookies, have done. And the third thing that we'll be watching out for is how raw material prices have, impacted, or what their outlook on the margin is, largely because palm oil prices over the last couple of quarters have seen a bit of an increase.
9% volume growth. Guys, I don't remember. I mean, did any other company do 9% consumer company in this quarter? I don't know.
You
That
should
sounds
ask
like
Manglam.
9%. Is it that number that's spooking everybody? You've baked in too many expectations. I mean, 9% volume from FMCG companies.
Manglam, it was like Surabhi just took off the bail. She looked at Rima. Rima was talking about the constant currency growth. I was thinking about the EBITDA per ton and the coal prices and how I know it has moved. And we had no reply, but you could tell us that. And then
the only company that I remember having done double-digit volume growth this time around, this morning actually we had them on the channel, is Akzo Nobel. So they've done double-digit volume growth.
But Akzo is also down 5%. So despite reporting a double-digit volume growth and being confident that this double-digit volume growth will sustain, that stock is down 5.5%. So there is no respite for any consumer.
Akzo has a lot of other stuff going on, as Manglam has been kind of telling us and alerting us on. So, but let's get back to the nifty names first. So back to Asian Paints. No buyers with this 8% fall also, Manglam?
Yep, Asian Paints with today's decline has actually turned negative for FY25 and it's down almost 30% from its 52-week high. What's interesting is that over the last 20 years, there have been only 2 occasions where the stock has given negative returns for the financial year, and neither of those 2 years included the COVID year. So the last time they reported a negative, return in a financial year was in FY23, and before that was in FY29 itself. For Asian Paints, usually the first to report numbers, this time around deferred its board meet, now is the last to report numbers, and those numbers were below all the others in the industry and also lower than everyone else on everyone's expectations, and that flew through to the bottom line. What's important now is to watch out for what happens in the second half. Is it just competition? Is consumer sentiment likely to improve? And are margins likely to improve after a near 480 basis points decline? Because the stock is pricing in a lot of the weakness. If they support, if there is improvement in the second half, then maybe the stock is at a support level right now. If not, then definitely we're looking at multiple derating for Asian Paints as well. Remember it being trading at around 58, 59 times. Now that multiple itself has come down to 45 times. And as a result of which, Akzo and all the other paint companies are also reflecting that multiple decline, because typically Asian Paints would trade at a premium to all the others. So if Asian Paints is declining, then maybe adjustment for those multiples. We're seeing a sell-off in all the other paint companies too.
Okay, do stay on. Mangalam, we'll come to you and talk about trend. But let's first go across to Dipan. Dipan, before you tell us whether you should buy the dip on Asian Paints, first let me just test your memory. Do you know any FMCG company which has given double-digit volume growth this quarter?
Not really. I heard that.
All right, everyone stop. So, no, I'm not putting you on the spot because we couldn't remember.
If they have, they just go back to September 23 and what are the volume growth at that point of time. There could be something unusual, a drop in volume, which is why we are seeing this kind of a year-on-year comparison. But I think, we are seeing a lot of stress as far as consumption stocks are concerned across the board, and even high-flying, high-growth stocks like Trend are experiencing slowdown in consumer spending. How long it will last is anybody's guess. But I can tell you one thing, that this wedding season is going to be really grand, and that may change the entire dynamics of the consumption-oriented stocks.
But you're not buying anything, Dipan? Are you buying anything right now? So they're all in a slump. Major FMCG names. Are you buying anything?
Not really looking at buying anything, waiting for a correction, waiting for the multiples to compress a little bit. But yes, I think at some point of time, consumption will get interesting. Look, it's a long-term investment theme, and such kind of few quarters slowdown is to be expected. Nothing to be too impacted by that. But from a longer-term investment perspective, I think that consumption has to pick up in India given its demographics. So it's just a matter of time.
All right, got that. Let's go back to Mangalam, though. Finally, he's going to bring us some good news, Mangalam.
Well, the only good news is that...
With regard to trend. So, tell us about trend. There's an initiation, and after the correction we've seen from the top, trend is back in trend.
Yeah, trend is back in trend, but even after today's up move, the stock is still about 20% away from its previous high. It's good news after a spate of bad news on trend. And all of last week, the stock was down about 10%. So maybe, there are some buyers after that correction that we've seen in the stock. Remember, the street was expecting 41% revenue growth. The company reported 39%. And on those elevated expectations, the company disappointed, if one has to use that word, and the stock saw a brutal sell-off. Goldman Sachs believes that after this 25% cut from the top, there is case for entry because it still offers a 27% upside. They have a target of 8,000 odd rupees, and they do believe that, going forward, the revenues can compound at almost 30%. We have a net profit compounding as well, which would be much faster than the industry. And the driver for that would be Zudio. Zudio is currently just about 1% market share. They believe that this itself could go up to 5%. And as a result of which, the EPS would grow or compound by over 29%. The stock correction offers a great opportunity. Let's see whether the multi-year share gain story with low competitive risk actually plays out as Goldman Sachs has been explaining.
Okay, finally good news from you, Mangalam. Thanks a lot for that. Well, let's hop across to Dipan and get his view. Dipan, your view on trend is corrected a goodish bit from the top. Today we're seeing a bit of a bounce. Would you pile on?
No, not really, Nigel. I think an existing investor, as we remain invested, committed to the long-term story of Trend. What they have done is really amazing when you look at some of the other similar peer group businesses, be it Aditya Birla Fashion or other retail companies, V-Mart, and so on. So I would remain invested, but the price earning multiple is just too high to make a fresh investments. The thing is, when you're already invested in a stock, then your margin of safety is much higher because you're sitting on profit. But from a fresh investment perspective, I don't think so.
Okay, let's look at some of the other earnings. Some of the negative reactions today have been Whirlpool. That stock is down about 7%. There is Equitas Small Finance Bank. Obviously, they have asset quality issues coming up, so that stock's been under pressure as well. And there is Aarti Industries, which has been quite a disappointment. All sort of negative numbers, and the stocks are falling quite a bit. On the gaining side, Ola Electric is managing about 2%. You heard the management talk about putting some of those issues with respect to service behind the company, talking about profitability ahead. That's a stock that's holding out positive. Deepan, you tell us, I mean, in the last 48 hours or so, any management interaction, earnings, or any result that really stood out for you, where you'd either look to buy the dip or you feel the numbers and the growth is confident enough to take a bet on?
Oh, no, not really, Surbi. I just want to get overdone with this earnings season. It's been a big disappointment. But I did see, this company which we are interested in, RateGain Technologies. We're very positive on travel, tourism, and these are great long-term trends. We saw what numbers came from Indian hotels as well, very impressive. And this RateGain Technologies really is a nice platform company and scaling up pretty well as it grows overseas as well and gets export revenues. Valuations now, considering the earnings have moved up, maybe more of a reasonable range. So that's one company to watch out for, and we definitely will be studying it closer and looking at recommending it or making an investment.
So RateGain reported numbers just a while back, and to quickly recap the numbers, the revenue growth was about 18% on a year-on-year basis. This follows a 21% revenue growth that they had in the prior quarter. The company's guidance was that for this year, they will see about a 20% top-line growth. So they're roughly about, at that level. But what stood out is the margin expansion. Margins have gone up by 260 basis points on a quarter-on-quarter basis. So margins have positively surprised, inching above the 21% mark for the first time ever. And that perhaps has got the street excited. Last quarter, the company had raised the margin guidance for the full year. And looks like the company is delivering on that. But the gross SIP inflows up there on your screen, 25,000 plus.
The FIs are selling. The reason that the markets are holding up and not seeing a sharper correction is because of you. Because the gross SIP flows are at around 25,000 odd mark. And as Surbi will tell us in a second from now, that it's the highest that we've ever seen. Just a few years ago, it used to be around 3,000 to 4,000 crores in a month. And now that number's at around 25,000 crores. In the last 3 years or so, it was less than 10,000 crores. And now it's 25,000 crores. But I think, Surbi, we'll have to look at the net flow number as well. Go for it.
When we were, just a bit of history, because we were all looking at sort of the Global Leadership Summit that's going to happen here that CNBC-TV18 is holding. So we were looking back at what we've covered during the journey. I went back and saw the mutual fund AUM size back in 2005 or so, when I started my journey with the network. It was about 1.5 lakh crores, the total assets of the Indian mutual fund industry. Now we're talking almost touching 68 lakh crores. So that's been the huge journey. To come to the numbers here, yes, these are the highest ever SIP flows that we've gotten, crossing 25,000 crore rupee mark. And just imagine, guys, almost 42,000 crores have been pumped in October when the FPIs were selling. Can you even imagine a market minus this 42,000 crores?
Indeed.
It's a really fulfilling journey for the
amazing, amazing, and good to see the equity cult being developed here in India. And I think Rima wants to tell you what she was doing in 2005. Okay, all right. So good flows, good to see. That's the reason we're able to combat what the FIs have been selling. For the time being, slip into a short break. On the other side, Aditya Sood, fund manager in Cred Asset Management, is waiting for us. Don't go anywhere.
Welcome back. So quiet on the Nifty, but we've got green back on the screen. So, considering the kind of market we've been in, I think consolidation with some green color, the bulls will not mind it too much. There you go. There's at least it's buying coming in at lower levels today. Speaking of buying, let's take a look at PFC, because this is the one stock that's had a very, very good afternoon today. Power Finance Corporation, look at that, 7.5% up and about. Let's go across to Abhishek. Abhishek, anything new? Any sort of idea around this? Any new triggers on the fundamental side, we're asking?
They reported the numbers on Friday and the presentation came in later, that is post-market, wherein they gave details of the business movement as well. So asset quality is a key highlight in the results, which is at 35 quarter low. Gross NPA ratio is at 2.7% versus 3.4% in the previous quarter. They have had some recovery into some of the accounts that were in NPA segment. Disbursements were really strong at 45% growth on a YY basis and 144% on a sequential basis. This is a strong disbursement. Why I'm saying strong is the fact that Q1 was on the weaker side. So on the back of that, this disbursal number looks really good, which means the growth momentum is back with respect to business momentum for PFC. AUM growth on a YY basis is at 9.8%, which is at a 7-quarter low. However, sequential growth came in at close to 4% on a sequential basis. This disbursements also led to the fact that they were on a better yield for them, because the net interest margin is at 9-quarter high of 3.57% versus 3.55% in the previous quarter. Now, brokerages do remain bullish on the stock. They have a buy or out performance rating. CLSA has a target price of 610, Bernstein with the target price of 620, as well as UBS, which has a target price of 670. Now, brokerages do say that PFC's valuation on at 1.1 time FY26 adjusted price to book value is inexpensive for the ROE profile of 18% that this lender provides. So 2Q provides more visibility of growth pickup. So they expect H2 to be much better with respect to disbursements and sanctions as well. And they are also looking at 13% loan growth in FY25 for PFC versus 9% that it has recorded in H1. So visibility in growth and cheap valuation working for stock in trade today. Back to you.
Thank you very much for that. Let's get in Aditya Sood, fund manager at Incred Asset Management, on the show now. Aditya, so many earnings misses and disappointments this quarter. We've seen a slowdown in urban demand, and it's visible across FMCG names, retail, auto, mall operators, chemical, consumer durables too have seen a moderation in demand. In your portfolio, did you have exposure to any of these companies where we've had these big misses? And what are you doing now? How are you readjusting it, and what is the call?
Sure. Thanks for having me on the show. So I think earnings need to be looked in context of 25% earnings growth post the COVID low that we see. Essentially, I think so. If you look at the long-term earnings growth trajectory, it is trending pretty much in line with the nominal GDP growth, which is closer to 12 to 13%. On top of this, what has essentially happened is that, and this is a call that we took, 6 months back in terms of being massively underweight on financials, is that, there is some bit of asset quality which is mean reverting. It is not deteriorating at a very, very rapid pace, but essentially it is mean reverting as I speak to you today. So our bet was that, essentially you had the highest net interest margins, the third highest credit growth in the history of financials, and there were certain banks which are having more recoveries than slippages, essentially, which was leading to a negative credit cost. Now, clearly, that 20 basis point of credit cost, just as an example, it has been reverted now to 70-80 basis point, and that has led to a bit of a disappointment. Now, if you add on top of this, what we are witnessing in auto, essentially, is both these sectors are cyclical in nature. And what we are seeing is that, there is a bit of a disappointment, which is obviously passenger vehicle story. But obviously, two-wheelers, after doing so well for last 3 years, have also, marginally disappointed. So that is a cyclical bit. On the IT bit, in terms of earnings, obviously, we believe that, this sector will have stronger dollar revenue growth to come through. So these are the, IT is a global cyclical, as you are aware. So in this entire, sort of scheme of things, we were overweight on healthcare, we were overweight on IT, and we were within consumer, we were overweight on rural plays versus urban. And that is the reason why, the portfolio performance has held up for us. Although I must confess that at this juncture, there are interesting opportunities because there was a lot of element of froth in the market. And now we have seen, 30, 40, 50% correction in a lot of stocks wherein we had froth in the past. Now, this is going to be a very, very earnings specific market for next, 6 to 12 months. Because what we are witnessing is that, there are some companies will continue to gain market share in a declining market, and that needs to be, evaluated very, very critically.
Hi, Aditya. Good afternoon and good to see you. When Aditya, I wanted to ask you about RS Systems. And this is in the backdrop of slowdown issues. Blackstone took over the company. It was doing roughly around 400 crores or thereabouts. After many, many quarters, it's still doing around 440 crores. Everyone would have thought there's cross-selling opportunities and there'll be a big scale up from here on. Tell us your take.
So I think so. One has to, evaluate this from a capability standpoint, and the goal that Blackstone possibly has here, and it is a well-publicized objective that, from $200 million or revenue run rate, they want to make it a $1 billion revenue run rate. Obviously, this is going to be a combination of both inorganic and organic growth. Now, if you look at this company, last 10 years, the top line growth has been, 15% odd. It is a small base that they have. Clearly, our expectation is to, in the phase one of their strategy, is to cross-sell to the Blackstone portfolio companies. What they highlighted in the last earnings call was that essentially 15 of the Blackstone portfolio companies are, clients for them today. So it is going to be both a combination of hunting and mining. We believe that there are very few companies which have got, and the capability gets reflected in the average revenue per employee billing rate that they have, which is, closer to $55,000. From an IT standpoint, I think so it is a very high capability company. Now, it is a question of, ramping up. They have already, successfully integrated Velatio as an acquisition target. So we do believe that, this 15% revenue CAGR is going to surprise over a period of time. Now, the key is going to be sizing here. So what we are resorting to is a small weight in the portfolio, but we do believe that we want to be aligned to product companies for the next decade rather than, investing into companies which are too overly dependent on services. And that is the reason why, this is one company that clearly stands out.
Or the short-term pain and play the longer theme. You're in for the longer run.
Yeah, I would like to believe so. I think so. From an IRR perspective, it doesn't make sense for a private equity player to come into the company. And what we have seen in the past is that, if you look at pretty much, if you have to list down IT companies, large and mid-cap both, most of the IT mid-caps are owned by private equity. It is very easy to run a, IT company possibly from a standpoint of a private equity.
Got it.
Okay. You spoke about now many interesting opportunities with the fall that we've seen in the market. Are they centered around the themes that you like, healthcare, IT, rural consumption, or are you even looking at other themes? And if yes, tell us, give us some ideas on how to spot, these individual stocks, because it's not top down anymore.
I think so. It is more a capability question, for one end of the portfolio. So if you look at, Tejas, for example, who would have imagined that, when Tata's took over as promoters, the top line will become bottom line, and it has all happened over a 3-year horizon, essentially, and who would have imagined that Tejas is going to report, this kind of blockbuster earnings. So if you look at, Tejas just as an example, earlier this was a fiber to home company, essentially, and now you have seen wireless, which was questioned by many that, whether Tejas has a right to win to execute on the wireless side. I think so they have done a phenomenal job because that is there in the numbers to see, because for the first time in the history of telecom in India, we have seen BSNL gaining subscriber base over last 3 months, and that is in contrast, sharp contrast to the entire telecom industry. Now, if you look at Tejas, what they said in the last earnings call was that, essentially they are going to always also focus on railway coverage. I think so they have a very, very bright chance of implementing Bharat Net type project in Egypt or going global. with these credentials that they have. So I think so. This is one example of capability. Secondly, what we have seen is that, essentially a lot of companies, a lot of small caps in India would have a long-standing track record. So if you look at the CDMO space, the reason why we find, Newland Labs very, very interesting is it is a very, very high capability company in our view. And the reason is that, they are heavily dependent on as a real true, upcoming CDMO player. They are very, very heavily dependent on R&D. So if you have to benchmark the R&D spends, if you have to benchmark the R&D capability, if you have to benchmark the compliance track record that they have, and now this new pipeline of 5 odd drugs. So that is one side of the story. The second side of the story in the portfolio continues to revolve around companies wherein earnings were beaten down, and this is like Stovecraft or Egarchi. Essentially, all these companies have gone through a massive capex cycle in the last 3-4 years. And in a down cycle, they were gaining market share. And now what we see is that, they are growing at a really very exponential pace. All they need is a market environment wherein obviously they continue to grow. So if you look at Stovecraft, an example, and if you have to benchmark their growth rate to a TTK or a Hawkins, which is key competition for them, they've gained market share in a down cycle. They are expanding at a very, very rapid pace. So our expectation is that, if you are a capability driven company, you will have, exports as a major thrust area. And this is where, Stovecraft is excelling at this juncture, because what we believe is that, what is top line today, in next 4 to 5 years, 50% of their top line today could be, only represented by the export opportunity that they have. So I think so it is about consolidating market share and then gaining eventually. On the financial side, our focus area is on banks, which are really very, very well managed, and we do believe that HDFC and City Union Bank are two such franchisees. So if you look at, City Union Bank from 2010 to 2019, essentially it was the best performing banking stock when the banking sector itself was not doing well. And what we have seen of late is that, they have started to grow now. Valuations are much more undemanding. They got re-rated to 3.5 times price to book. Today, the bank is trading at 1.2 times price to book, which is very, very inexpensive to our view, because it is a very, very high quality franchise. They are very, very conscious about the NPS cycle. So I think so. These are some of the elements that will clearly stand out.
Got it. All right, Aditya. And valid point you make on Stovecraft was a big underperformer, but now they're outgrowing the industry. Most are not growing or seeing a degrowth, and that one's growing. And the management has told us here on CNBC-TV18, as they start scaling up, margins will pick up because now they're able to cover the fixed cost as well. So explains why that stock has bounced back. By the way, the stock to note right now is UPL. That one has taken a sharp knock because they've reported a net loss. And first look at it, those numbers appeared very, very disappointing. So let's get some of those numbers up for you on screen. Explains why the stock, after seeing a relief rally closer to around 600 rupees, it's come back down. It's on the verge of moving to around 500 rupees. So let's pull up that net loss number. I think that's the factor that's spooked the street. And there is some margin contraction as well on a year-on-year basis. Explains why the stock is lower, in the last few minutes. We'll try to get you more details on UPL. Well, Aditya, we'll thank you on that note for joining in, giving us your take on the markets as well as a lot of stocks that we did discuss. For the time being, let's slip into a short break. As always, we'll get you a check in D Street Chatter. Nimish is waiting for us on the other side. We'll get our technical experts back with us as well. Welcome back. Markets are holding mildly in the green, but I just want to pull up Hindalco. It seems, the street is sensing something because the metal index is down. Hindalco comes out with a set of numbers. Normally, the numbers are out by around 2 p.m. odd. It's not yet come out. And Novelis's numbers were a disappointment. So we'll wait by to see what clarity we get out of there. But for the time being, this is one of the lone metal stocks that are trading quite strong. It's currently at the high point of the day as well. The other one is Shankara Bilcon. From the broader markets, I think in the last 5 days, the stock is up 25%. One of those bombed up stocks where APL Apollo has stake in that company. Currently, it's up 10%. Last few days, I think it's up more than 25%. We asked the management of APL Apollo, what do you want to do with this? They said it's just a strategic investment. So keep an eye out on that one as well. Moving on very, very large volumes. So just spotting that out. But Nimesh is back with us. Nimesh, tell us, what are you picking up? What's the sense of the FI flows? Are they selling less today?
Well, not sure on the FI sell number, Nigel. But again, the market's been extremely volatile and choppy as well. I guess the bigger disappointment is the earnings season, right? We keep getting a lot of weak earnings, and that's the space which has been largely hit from a broader market point of view as well. From a flow perspective, I understand there is a very small, very selective buying in the broader market stocks from larger FIs. So maybe that's the reason why some select mid cap and small cap have recovered from the recent lows. But I guess the last leg of the earnings season, which typically is quite disappointing, and the FI outflows, these two are the very critical things to watch out, at least in the very near term, from a market directional point of view. And technically, I think 24070 is a very crucial level to watch on the downside. If that gets taken out, the feedback is you will see a sharper fall in the Nifty and in the momentum stock. So that's the overall feedback. But at least I can tell you that there is a bit of interest back in very selective mid-cap names from larger FIs today.
Okay, got that. By the way, those are Balrampur Chini numbers, not quite sweet. Revenue is down and the profits reacting, and the stock is reacting to it as well. Nimesh, what about individual stocks? What's on the radar today?
Well, so the first stock on my list is Shriram Pistons, NSE listed. Volumes are generally on the lower side there, but the stock is buzzing in trade today, up 3%. And again, the street is anticipating a corporate development very soon. What I understand, company is likely to do an acquisition, which they've been looking for a while now. In fact, the last couple of calls, they did mention that they're looking for some acquisitions as well, and the company is sitting on cash as well. So that's something to track in Shriram Pistons. The second stock is Cipla. Well, the stock is consolidated after the earnings, but today the stock is down. And largely, there is a very strong buzz that maybe there could be a large block deal in Cipla very soon. The indication is that maybe the promoters may sell a small stake via block deal. So that's Cipla. The third name is Vanberry, a mid-cap name, but again, in a falling broader market, that stock has relatively outperformed. This month, the stock is up 10%. The volumes have actually picked up as well. And I understand the company is likely to raise funds via, very soon. Most likely, a preferential issue to some influential investors. So that's to track in Vanberry. And the last is Dodla Dairy. Again, within the broader market, it's relatively outperformed. Stock has been flat for many weeks now. But I understand a leading domestic mutual fund has been an active buyer of late. So it looks like the name will get added to the shareholders list very soon. And also there is a potential of a large block deal in Dodla Dairy as well very, very soon.
Thank you very much for that interesting list as always. Mitesh Thakkar is now back with us for a few BTST calls. Mitesh?
I think I'll go with the BTST on HCL Tech with the stock at about 1858 and look for a target of 1880, maybe even higher for tomorrow. And STVT on Godrej Consumer with a stop at 1231 for targets of 1205.
All right.
Okay, all right, got that. Mitesh, thanks very much for being with us today. Let's see, we'll pick it up tomorrow morning. Right now, a quick break. We'll come back with more market talk in just a bit.
Welcome back. Absolutely flat. The sensex had just gone into the green, now back in the red. But it's been a very wide trading range through the day. The high today was 24,336. The low today was 24,004. We're talking about a swing of 330 points on the Nifty. Gurmeet Chadda, Managing Partner and CIO at Complete Circle, is now with us on the show. Gurmeet, hi. So many earnings. So tell us, have you made any purchases or any stocks that you'd like to talk about?
So we've been dipping into auto ancillaries, as I told you. We added Sandhar Technology. The results today came in pretty good. They're almost now at 1,000 crore guideline. I think at this run rate, I think they should do 150 crore kind of a PAT and maybe 200 next year. Also good to see more free cash flow and repayment of debt. And they have inculcated another subsidiary basically for EV, which will be into motor controllers, DC-DC converter, etc., which is the EV portfolio. So core doing well, incubating EV, free cash flow generation augurs well. Stock had corrected more than 30%.
Gurmeet, we missed the stock, Gurmeet. We missed the stock you're talking about.
Sandhar Technology.
Sandhar. All right. Please go on. Sorry.
Yeah. So that we added in the portfolio, Nigel. We are dipping into Tata Motors as well in that side and bit into Uno Minda. We've added some recycling names, which I think is a huge opportunity. Most companies are sub 10,000 crore market cap in this space. Whether it is, I think VATech Wabag made a new high today. It's up. It's crossed 10,000 crore market cap now. We have Ganesha Ecosphere, which is into plastic recycling, as new norms of 30% recycled plastic chips come in. We have Gravitas, which is into lead. So I think this is one area which I think the size of the opportunity is big. And the companies are, as I said, most of them are sub 10,000 crore market cap. So we're building on to some of them. And now we will be looking at some of the China plus one themes with the change of administration in US. So for example, a lot of opportunities will come in electronics, pharma, especially the generic versions, as a lot of drugs have got approval with very little testing data, which Republicans have been pretty opposed to. So there'll be some opportunities there as well. So these are the spaces we have been broadly nibbling on and still continue to remain overweight on banks.
Okay, all right. Guru, just hold your thought for now. We have UPL that have delivered their numbers. It's very, very disappointing in terms of a performance. But as we have seen with other companies like Laurus Laboratories, the next quarter is going to be good. So, that's why let's pull up what UPL is saying. They're saying they're on the path to achieve their EBITDA guidance as well as the net debt guidance levels. So I think because of that, we've seen a wee bit of a bounce from the low point of the day. I think we should get this line up for you on the screen. The sheet would have been a little bit concerned whether the EBITDA guidance will be scaled back or debt guidance. For the time being, they're saying, no, that's not the case. Gurmeet, you had told us last week that you were looking at buying, Tata Motors. And today as well, though the numbers are fairly disappointing, it seems the street lapped that up. On UPL and the related spaces, do you all have any exposure?
No, the only space we have which is linked to chemicals, one is PI industry, which is more a CDMO play and more agro and CDMO play within chemicals and crop protection, a bit of pharma. And there's some small exposure to Deepak Nitrite, largely because of the backward integration they have done over a period of time. So we're not looking at this space, and some exposure to Tata Chemical, like again for the valuation, because trades at over 11 times, and you have some holding company play as and when Tata Sun monetization happens, and they have exposure to Reliance India as well. But chemical exposure in the portfolio would be sub 3%, Nigel. I think we are still maybe a quarter or two away from inventory destocking, pricing stabilized. You got to watch China a little more closely before really taking an aggressive bet here.
Right, and you all bought into Tata Motors is what you told us even last week. The stock has seen a fair bit of correction. Asian Paints, what do you do, Gurmeet? Painting your house but not buying into the stock, or doing both?
I think, Nigel, I want to look at the industry-wise paint numbers. I think 0.5% volume. It's probably I've seen it after a very long time with Asian Paint, so it's a bit of a surprise. Obviously, it seems to be some pricing pressure with likes of Birla, JSW entering this space. So the bigger level is if there is a broader industry slowdown in paints, then you have to look at resins, you have to look at pigments, you have to look at dyes, other chemical and solvents as well. And paints also supply to automobiles other than housing, automobiles, infrastructure, housing, etc. So I would like to dig deeper into this, if this is more seasonal because of flooding and a bit of an off season we had, or this is something which is more structural. So you probably have to see the entire industry. But yeah, it is disappointing, especially if you trade at these kind of valuations. We have more exposures to cables and wire segments, home improvement plays like Stovecraft, polycabs of the world. So that is where we are more exposed to. Paint exposure currently is nil in the portfolio.
Yeah, that's a fair point. I mean, if this is a structural issue, then it'll impact others in the home improvement space. But beyond paints, consumer overall, Gurmeet, hi, afternoon. Look at Britannia. Look at the nervousness. 5-6% down on the stock. We all know the narrative. I mean, in FMCG is nothing hot. But are you using this time to accumulate? Because finally, these stocks are no longer trading at the absolutely gravity-defying valuations that they usually trade at.
Staples is something, if I were to, Britannia is not exactly staples, but something we will probably avoid for now. I think we'll probably wait for a more rural recovery. I think better way to play is through the farm equipment. Look at M&M, for example. They've increased the guidance in tractors. Their market share was 42.5. Overall farm equipment, their market share is now closing to 44%, which is the best ever. The stock has corrected from 3,300 levels, so trades at about 26 times. Then you have, likes of passenger vehicle names where the correction has been more than 30%. I think the other way is travel. We have a huge wedding season after the festive season, which has gone by. Oil prices are well behaved. Airlines space we like Indigo at this price. I think the last quarter was a bit of a aberration, but if you see the passenger load factor and average tariffs there, they are shaping up pretty well. And more in the discretionary travel and entertainment space rather than staples for right.
So the upcoming wedding season, Gurmeet, that you referred to starts from tomorrow. And in the second half of the year, in H2, there are 41 auspicious wedding dates, which compares with 30 same time last year. So 30% more, which is why everyone's so excited about, possibly this, marriage season being absolutely extravagant. So tell us some more themes related to this that you could look at buying now. In the past, you've spoken about Indian hotels. I think Lemon Tree is a stock that you own. You were looking at Sami, and Sami delivered good numbers. What else at these levels?
So hotel space we continue to like. The model has changed now. It's versus the old model now. Everybody's guiding for 50% managed keys versus own keys, which makes the capex reduce and obviously return ratios improve. We like Indigo. We're looking at some names there. We're looking at some more portals like which are into travel and leisure. Something like Zomato, which is now launching a district app where they will be housing the dining out business and ticketing business separately. My belief is that the consumption basket is changing thick and fast, especially in urban, and your consumption portfolio should reflect that. We've added Zomato a little bit. We are also looking at something like PV fintech, not really consumption, but growing financial savviness. 90% of insurance being sold online, and we have one luxury watchmaker in the portfolio, which is Ethos. But I'm not sure I'm going to add more at this valuation.
Okay, all right, Gurmeet, we will leave it on that note, almost getting into market close now. Thank you very much for the perspective. Let's just look at the day. So it's been around the flat line. The bulls will be disappointed that they've not managed to go home with some green on the board. But then if you sort of see it from the other perspective, at least we've not had a bigger decline. But disappointment, yes, because while we were trading, European markets have been doing much better than us. Let's talk about the major nifty movers, the stocks that we were just discussing. Asian Paints, 8%, the biggest result casualty of the day. Britannia, lots of nervousness ahead of those numbers, 6% down on that stock. There's been some profit taking on healthcare names like Apollo Hospitals, Cipla. These are stocks on the way down as well. M&M down 2%, while a lot of the other auto stocks have actually had a better day. While M&M is down, you did have the likes of Maruti on the upside. Aisha managed a little bit of green as well. Anyway, speaking of the upside, let's look at the top half of the screen, and that's where you will find plenty of IT lending some support today. HCL Tech, Infosys, Tech Mahindra, TCS, Wipro, all of the IT names have seen steady buying. Not too much, but some incremental buying that definitely helped the street. And Trent managed a good show as well, 2.5% up. The mid-cap market was the bigger problem today. The mid-cap index is going home with a cutoff 1% and a pretty negative advanced decline ratio. So that's not such great news. But that's it. Monday's trade, some red on the board. All right, with that, we come to the end of this edition of Closing Bell. Many thanks for being with us. Don't go away because Markets Forward will take the action ahead.